All right, everybody, welcome back. It's a broad market analysis. Again, I was in Nashville. I'm back now. So this is coming to you on a Monday night opposed to Sunday during the evening, but it's still going to be great because it's still in play, if you will. And I'm going to go over that. We're definitely going to change it up. It's been too many weeks. I shouldn't say too many weeks. It's worked perfectly for us. And now it's time to create a new blueprint. So this one's going to take a little bit more time because again, we're going to scratch all the levels, then we're going to get some new ones in here. Okay. So let's go over it though. What happened last week? So price, if you will, you can see started to break down here. Now, I'm not a huge fan on the broad market analysis charts, the BMA charts. And I'm going to say this because there were some trades taken around it, and I want to kind of explain. Listen, the market came or close to the supply zones. Okay, because it came close to a supply, we're looking for it to pull back, right? And we need price to come back into demand. And so remember, if price is above here, then we're looking for levels to the downside to be support. Okay. Now, support versus some demand, right? Let's talk about it. We had the green zone. We had the green zone here. We had a green zone here, and we had a green zone here, and we have a bunch down here. All right. So we were building demand zones as we were moving up, and now that we're making lower highs, we're building supply above us. Okay. Now, there's nothing wrong with trying to take the trade when it pulled back, but there's a couple things that I want to show you after the fact that can kind of help you. One thing to take into consideration before you're taking along is the trajectory or the momentum of the candles coming at you. And I promise you, they are all different. So let's talk about this. All right. Now, price was coming down very quickly, like this. Okay. And sometimes price actually does something like this. Okay. We're just kind of, waivers, ebb and flow, kind of, it's just not that mean, right? And let's say that this is like the neutral strategy, right? Like right here, and then it comes back down. Well, this look compared to this look are two different things. This is angry, this is, maybe I want to go down, maybe I don't. So when we come back to this, I want you to think about if you were trying to go long here on the pullback into here, and you're trying to write down notes or you're journaling what happened to your trade. One thing I would tell you is please, please pay attention to the trajectory of the move to the downside. It was pretty wild. It was actually pretty ugly. Once it broke down and gave you the short, it did work. It came in at T1 and not it never went back over this level. So T2 and T3. And you'll notice that we came into demand and flushed a demand zone, okay? And we flushed it and then we ended up coming right back. And today we got this like really nice bounce out of it. Okay. So that's just like the notes we're going to take away from that. So right now, what I'm going to do is I'm going to create, let's go to drawings and I'm trying to think here. I'm going to rename the drawing set. That's what I'm going to do. No, I don't think I'm going to do that. We're just going to, no, we will. That's what we're going to do. Okay. So I don't need to save all these because I don't give them to anybody, and I've been saving them for years. And I think it's about time that I just kind of start drawing over them. This will be the first time I did this, so just bear with me if I'm a little slow at it. But we're going to rename this one 9924. Okay, so I'm going to rename it. It's now 9924. Now I don't want any of these. Okay, I'm going to get that out of the way. This. Okay, I'll leave these green and red on here for right now. And the reason why I left this is because we have not come back to this zone and we could be headed there. All right, like it's only Monday. We had a nice relief bounce, but other than that, we could be coming back into this demand zone. Now, over here, let's talk about what happened. Same thing. Once we broke down, you should have been looking at going short. Price did come into T1, T2, T3. It just broke down and it stopped here in the demand zone. So what I want to do here is I'm going to take the drawings. I'm going to create the, actually on the drawings, let's see here, drawings, rename drawing set. We're just going to rename it. Okay, just like that. Boom. And we got to decide what do we want to keep. We're going to take all these out. They're no longer important to us. Okay, we'll keep that red zone up here because we have not touched it. Okay, and we're going to keep this zone. Okay, so I'm going to keep that zone. We'll keep this stuff down here as well. Okay, because we have not hit those targets. But I'm going to keep the zone here. I'm going to keep this target because we have not come down to it. And I'm going to take this target away. All right, so we know that we're in a zone there. But let's start with this over here. So on the SPY, if you will. Okay. And let's figure out what we want to do. I'm going to go to a higher time frame. All right. And I'm going to take it into a weekly. Just kind of feel it out and see what it looks like. I'm going to move this over here so I can just concentrate right here. And let's just use some Fibonacci's real quick. So this was last week. It was a really deep move to the downside. And then we have, we have a trend. So let me start there. We have a trend here. And now we have a temporary, I guess, like a mid trend, if you will, right here, right? That started there. So boom, big up move. And then we have this down move. So let's do a primary Fibonacci's from here to here and see where we are. Boom. We stopped right at 38.2. Now, I love this level, right? We know we love this level. So we're probably going to use that level for sure. And sometimes, let me get my red, if you will, and move it somewhere over here. And I'm just, the reason why I move the fibs is so that I can see what the heck's going on. This is the thing about not recreating and getting a brand new chart. Is like when I leave all these lines on here, then it makes it a little bit more complicated. Now you know why I typically scratch everything and start over. Anyways, so what we know is that for this trend to the upside, this is actually still really bullish as long as it stays above the 38.2. So we're going to use this 38.2 in this case and say, okay, well, if that's the case, John, I want to be bullish above here, but if it breaks down, then I want to be bearish. So we're going to use the red line of the neutral strategy there. And then for the green line, like where would I want to get long? Well, if I came up here and said, okay, well, I want to get long, guys, at 23.6, you could see here that 543 and 551, that's a good $8, and nobody really wants to sit still for $8. Like you want to have some sort of action off of that level. Okay. So here's the thing. In this case, I'm actually going to switch this around. I'm going to pretend like it's Sunday. Okay. And again, I apologize, but that's the way we're going to have to do it. I'm going to use yesterday's high. Okay. And yeah, we're going to keep this one. We're actually going to use yesterday's high. So we're going to make that green and we're going to use this as the red. All right. So that makes sense. So if we break down below the 38.2, then I want to look to be getting short. If we can get above yesterday's high, and usually what I'll do is just go just a tad bit over it. So you can see here, the high today was around 547.75, and there's structure. Now watch this, there's structure. Okay, I want to look over here. See this wick? Okay, that wick right here. I'm going to go just above that, right there, and that's going to be my trigger long. Now, the 23.6, this is where we'd like to get, right? So let's go ahead and find a level right there, 551. So 548 to 551, that's nice. And then we have structure. So if I go here, I'm looking left, boom, there's a wick, and I have a future yearly edge. So I'm going to go right there for T2. And then up here, I'm actually going to use the monthly edge. at 557. So what this tells me right away is, hey, remember what the sentiment was on the broad market analysis, that I'm bullish because we came into levels, but I'm also super cautious because we're stuck in clouds, kind of like on all time frames. So because we're stuck in here, I'm not overly bullish. I'm not extremely bullish. See, I'm not extremely bullish. The weekly is actually bearish. So the daily was awesome, right? Today, the monthly looks great. The yearly looks great, but we're cautious at the moment. All right. So we had three targets to the upside so far. We have these great levels. We don't want to be short unless we break down below the 38.2. Okay. So I'm going to put this in here for right now. Oops. And we're going to put that. So we started off a little weird, but it's already starting to get groovy here. So I appreciate it. Thanks for hanging in there with me. And then we have a future monthly edge. Well, because of that, that's okay. I'm going to actually make a short target really close. Okay. So that means if we go short at 543.48, you're only looking at, less than $1.50 or so to the downside. And then you're looking to cover some of that position. Then to the downside, I'm going to use the 50. And I'm just being a little particular here, trying to line these up. All right. And then we have this demand zone. Okay. This is the demand zone that we just came into. All right. Or sorry, this is the demand zone we did not get to. Sorry about that. All right. So boom, let's do that. And, I'm going to do this. I'm going to come just right around the kind of like a double bottom, if you will. That will be T2. And then T3, we're going to keep it here on this demand zone. But now we're going to actually move this up right there. And we're going to use and go like this. Okay. Just like that. Boom. There we go. That's what I want. All right. Now, that was pretty quick. That was actually not hard at all. But now what I'm going to do is I'm going to break it down into a daily and see if we can basically move the levels just a tad. See if we need to do that or not. Okay. All right, now notice my trendy edges start popping up. Remember, I just did some new videos to really help users who are brand new, that don't happen to know everything about trendy edges and so forth. So as we go lower in the time frames, you'll start to see different supply and demand zones. The edges are supply and demand zones. The reason why they're just a line is because I had the zone turned off, but you can turn on the zone if you like. Okay. Okay, so you can see here that this is actually 541.81 is lined up with the weekly as well, so that's awesome. 539.23, that looks good. We have a mid, so I'm just gonna come up and just barely move that. Um, yeah, I mean these look great. I love them so far, but what about the upside, right? We have this as resistance. I'm actually gonna come in here and I'm going to use that. So almost just like this level is to this level is to this level, meaning you're not getting a whole lot on your first trigger longs or trigger shorts. Okay. And then let me look over to the left. I'm going to bring this one in just a tad to where it matches more of this wick here. And then I'm going to continue to use this trendy edge right here. So these are fine. This is exactly what I want going into this week on the SPY. Here's a little trick if you don't know this. See how I like scrunch this over? If you want to make this chart even with this chart, you just come back in here and you hit 2 again. Boom. Now we have 2 charts. Okay. All right. So there is our neutral strategy for the SPY. And if you want to take this one step forward, guys, if you want just a little bit different levels than I have, you could take this into a 4 hour and take a look on the 4 hour and say, okay, well, I want to tighten these up just a tad bit more, John. And you could do that. You could come in here, look for your inside and down formations, see if this really makes sense to you, in this. I like them, so I'm not going to touch them for the moment, but that doesn't mean you have to like them. Seriously, yours could be different than mine. I'm actually going to move this 541.81 over here. So that's lined up better. There we go. All right, and let's get on the QQQ. So we're going to take this, move this over like that. We're going to do the same thing. We're going to start over here on a weekly. So we're going to start on a weekly. And let's do the same thing. So we'll repeat what we did on SPY. We'll take this kind of like primary, if you will, on the Fibonacci's, just like that, and kind of get an assessment. So where I'm anchoring my fibs, is on this trend. And remember, it's not bullish unless we can get above the 38.2. All right, but we're in a demand zone. So I was looking for prices to move, and they did move today. Again, it's Monday, it's not Sunday, so I apologize, but we did move, and that's great. I'm going to use a secondary Fibonacci, and I'm going to use these last 2 weeks. And the reason why is because I teach this in my Fib class. 1, 2, 3. This makes up that trend, and for me, this is where the trend started here, started right there. So I'm going to use my secondary Fibonacci and come right here and come down to the low. And all right, this is perfect. I love this so far. So we're going to take this green, and if you notice, in order for this to kind of get out of the bear channel, out of the extreme bear channel, we got to get above the 23.6. So I'm going to do the same thing I did on SPY and put this green level just a tad bit above today's high. And it's above this 23.6. Now, if you're brand new, you're probably like, holy crap, this is a lot of lines. If you wanted to, you could do one Fibonacci at a time, just so that you don't have so many lines. And again, I have lines on here from last week, so it's going to look like this, but I promise you it's going to clean up. And if you have any questions, just ask me. Then what we're going to do, if you notice from, and what I'll do is I'll take these off to kind of help you. Take this off for a second. And now what we have is this trend. Remember what the 618 means, this yellow line. It means as long as we can stay above there, that's a good thing, right? All right. Well, if that's the case, then I don't want price to drop below there. If price were to drop below there, things would look pretty rough. All right. So I'm going to put this down here. But the problem that we have is that this is 447 and this is 456. I do not want a neutral strategy that's $9 wide. Like, holy crap. Like, we don't want to sit here and do nothing. So notice this future edge that I have up here. What we're going to do is, instead of this being our short trigger, we're going to come up here and this would be our short trigger, and then we would short down into the 618. Okay, that's all we're doing there. Now notice this is a demand zone. All right, so in this case we have two white lines that are very close to each other. I'm going to use the most proximal to price. So I'm going to get rid of this old one. Okay. And I'm going to shape this up just a little bit, leave that demand zone there. Matter of fact, because you and I are watching this, we're going to take the demand zone out just like that to clean it up. And you understand, between this green trigger and this white line, these are great levels. Okay. We want this 618 to hold. As a bull, you want to get over this green level, but everything in here, we just don't want to do anything. It's neutral between all of this. Okay. All right. So we're going to take this off. And again, your target one, if you want to get short, is going to be down here. It gives you about $3 or so. Actually, just $2 and some change to the downside. And then our targets after that would be, it looked like we had a white line on here before. What I'm going to do is, I don't want them that far away. All I'm doing is I'm going to line up right here, is right here, right here, and right here. Okay. I'm going to use, it's almost like a trend line. Okay. And I want you to watch my crosshairs. So when I move this, I want your eyeball should be over here. Okay. When I move this, I'm trying to get at a level that kind of touches all of these. Touches all of what, John? This, and this. Okay. Watch. See, I'm touching all of them. I'm still touching all of them about right there. That's going to be my target 2 to the downside, right about there. Okay. And then I'm going to use the 76.4, which is right there. Those are going to be my targets to the downside. Now, to the upside, what does all of this mean? Okay, remember 618, very important that we can hold. And this is the bullish channel. If we were to get back above here, that means over the last 2 weeks, now we're getting back into the bullish channel and it's no longer bearish. Okay, so where's my first target out of the gates here? It's going to be up here towards 461. Then I'm going to use this structure, this wick right here, and then I'm going to use the 23.6. Okay, so for right now, these are my preliminary, targets. I'm gonna bring this one down just a tad right before that level, and let's put this on here. Okay, just like that. Now we're taking note. There is an inside week so far. All right, all right. Boom. This is just too far away, so I'm gonna come up just a tad, about right there. Actually, you know what? I'm going to leave that. So I'm going to hit Control Z. Watch, it's going to go back to where it was. I'm going to leave it. The reason why I'm leaving it is because we're not out of this bearish crap. I mean, look at this: green, yellow, red. If we do dump, like the Nasdaq is going to be the one that leads to the downside, and it's going to be ugly. So we don't want targets that are only $2 apart on the Nasdaq. We want a little bit of scare, right? Fear. So, all right, so we have that so far. And then we also, if you look up here, this is an inside and down formation. Okay, just like that. So that's great. This line, you know, is right before that wick. This is another line in there. So we do have some supply up there. That's good to know. And now we're going to break it down into a daily candle. All right, notice things start to change. We're going to bring this down to our trendy edge. You'll also notice that the trendy edge is pretty close and confluent with this cloud. So that's going to be like kind of a double whammy, if you will. And you have a daily edge there. There's a lot going on there. I would expect resistance. Matter of fact, and I need to bring these over. We go about right there. Okay. Then we have a trendy edge here. So we're just going to use that trendy edge. And then we're going to use the top of this wick. So right there. Okay. So right there. Now, the targets to the upside, we're looking at 460, 465, 470. I don't like this target, guys, because it's so far away and I'm just not extremely bullish yet. So I'm going to go up underneath the bodies of these candles. And I'm going to go with this white one over here, and that's going to be my first target. And then I'm going to bring this guy down to just underneath the wick of this guy right here. And then we're going to keep this on the weekly. So I like that right there. All right, so once again, let's bring 447.08 underneath price. All I'm doing is trying to line it up because they're so far away on this chart. And then 442.90, and then 438.08 right there. Good. All right. And these are skinny, right? Remember, I don't see a lot of value to the upside until I'm wrong. This gives you a little bit more room to play in here. Just know if we get above that T1 that we still have in this area resistance around 460 and a half. Okay. So what I'm saying is if price, starts to go bid and it looks really great and you're getting super excited, don't forget about this if you don't have this on your chart. So I would mark it if you want to. Okay. So really like all in this area with the top and wicks tells me that there's selling pressure, and then not only do you have selling pressure, but you have the cloud here and the trendy edge. So this whole area, remember, they're building a lot of supply above, so it's going to take a really um, good catalyst to push us through that. All right, so we're going to take those off, and let's talk about the downside a little bit. I'm going to bring this up to the trendy edge. Yeah, I'm going to take the green box out of here for right now. Just kind of clean it up. I'm going to come over here. I got a 2. And again, if you really want to start digging in deeper, you could go to a 4-hour if you want to. We'll do that really quick so I can show you. We got a 4-hour over here, and now we're going to put a 4-hour over here. A lot of top and wicks. We just talked about that. Got the trendy edges up here. I don't see any formations in here, but there's definitely a lot of selling pressure between 464 and 470. Not easy. I like these. I like the targets, folks. So this is going to be our neutral strategy for this week. So this is where you could pause it if you like and put those levels on your charts. Remember, just a quick overview. You could do this different ways. So if you're just looking for quick profits, as soon as it breaks, you can look to go long. If you're trying a neutral strategy where you're trying to stay in the position for the week, a couple different things. You could look at selling iron condor with my outside levels. Okay. And again, not a financial advisor, just using technical analysis here and teaching you that. But I could sell an iron condor in here and I expect price to do this. Okay. Just like that. Sideways. I could, on a break and a close above, that's the conservative approach. So if you wait for the close, which could feel like a lifetime, especially if you get a move like this during the day, that's a conservative approach if you want to wait for it to close. An aggressive approach is, hey, I feel like, we found demand and I believe price is going up. So as soon as it breaks through, I'm going long. Now, I want to make sure also before we finish this little segment of this that we are supply and demand traders. So this is a strategy based around neutral. But a lot of times, what I'm looking for is if we came into a demand zone, then my overall sentiment is we are bouncing. So I would much rather say we wake up tomorrow morning and we come back to, I don't know, here, say we're at T1 to the downside. I'd actually be looking to buy the dip because this green zone, right? Same thing over here on the QQQ. If the supply zone was, right here, which there is a lot of overhead supply here, and we were to gap up into T1, then, I'm not very bullish here. Again, these things are not telling me or not screaming to be extremely bullish. So take what the market's going to give you this week. My suggestion is not to be overconfident on your um, sentiment, meaning like if you're super bullish coming in this week, I would just say step with caution. If you're super bearish, step with caution because we're basically lined up to where we're just going to chop around. There's some major zones down below. It doesn't mean we can't make money. All right. Love the strategy. Not my favorite this week as it looks really choppy. Going back to the cloud, I would highly, highly hyper focus. Can we get above the cloud? If we can get above the cloud, hold above there, check back, make higher highs, and then I'll start feeling super bullish. Right now, I am torn. So I like the idea of taking the neutral strategy, but taking what it gives you very quickly and not being afraid of trimming a little bit faster than you are used to trimming. Okay, that's my overall neutral strategy. I hope you guys enjoyed it. Don't forget to give me a like and share it with your friends. Have a great day.